In today's video, I'm going to teach you how to trade market correlations in Tradingview. Correlations help you see how two markets tend to move in relation to each other together, opposite, or independently. Understanding this can improve your analysis by confirming signals across assets, avoiding doubled exposure, and spotting potential hedges. Start on any chart in Tradingview with the asset you care about. At the top, click the Compare or Add Symbol button, the one with the plus sign, to overlay a second market. For example, you might add the US dollar index, DXY, on top of a Bitcoin chart, like BTC/USD. When you add it, choose whether to display that second symbol on the same percentage scale or in a new pane. The percentage scale view is great for apples-to-apples comparison, because it normalizes both assets and shows their relative performance from a common starting point. If you prefer to keep each asset on its own price scale, place it in a new pane, which keeps the visual cleaner while still letting you compare direction and timing. Make sure each line is clearly distinguishable with its own color, so your eye can separate them at a glance. With both markets visible, you can already get a feel for the relationship when they rise and fall together. Correlation looks positive. When one climbs as the other drops, that's negative correlation. To measure this relationship objectively, open the Indicators tab and search for correlation coefficient. Then add it to your chart. You'll see a line appear below the price. This line quantifies the relationship between your main chart and the symbol selected in the indicator settings. Values near +1 indicate a strong positive correlation; they tend to move in tandem. Values near -1 indicate a strong negative correlation; they often move in opposite directions, like gold versus a strengthening US dollar. Readings hovering around 0 suggest little to no consistent relationship. Use the overlay for quick visual context and the correlation coefficient for numerical confirmation. Keep in mind, correlations can and do change as market conditions shift. So treat them as dynamic, not permanent. They're a tool to inform your decisions, not a guarantee of future moves. That's the core workflow. Thanks for watching.